Good morning and welcome back to another pipeline trading video. Today I want to just give you an update on what I'm seeing in the S&Ps and the Nasdaqs. Things are actually starting to look a little bit more bullish. However, there's still a lot of things going on geopolitically that we don't have confirmation on. So as much as it's bullish, it's also something to be very cautious. If you go back a day or so, the video that I made, I said we gapped up. The bullish thing is that the 10 crossed the 20 and the price is above the 50-day moving average. That is bullish. So now we have to see how big of a push we're going to get. Is there going to be resistance? We're in an order block and it's a bearish order block. So this is where you would see liquidity and the institutions would be building a short position at these levels in the market. So another big thing that I want to go over is the semiconductor ETF. Now, this is pretty crazy. If you go on the weekly chart and you look at how far above we are from the 200-day moving average, which is the orange dotted line, you can see the confluence, 86%, 94%, and 79, which we're going up or gapping up today. And right here, it looked like, okay, this was the ceiling that we broke above and then held as support right here. And what's interesting is if you go and look at the other days, the 50 days, or you just, it's insane on how much everything is lining up with the thesis of the whole market rolling back over. And if we don't get any clarity and the war starts up again, there's a few things I'm going to go over, but that's the big thing. The war is not over. You're hearing it every day, Lebanon and all the stuff going on there. Things can turn over, and the charts are actually showing this. If you look at, again, the semiconductors on the daily chart, and you pull a line from this pivot high and connect it, we're going to hit it today. Today or next week, we go, and listen, we could go up a bit above it, but this right here shows you that a top in the semiconductors is pretty much in. And another thing to go over, if you're saying, well, there's no way, look at this. We had from the bottom of April, what is this? Right, March, sorry. Yeah, so call it April 6th. We've had a 20% run in 9 days in the semiconductors, the ETF. That's huge. So we haven't touched the 200-day moving average at all, which typically we do, and then bounce and then go below, and then it's next leg up. So again, this is going with the thesis that the markets are going to roll over. Are we going to get a double top in the markets? There is some room to run. Things are looking bullish. Oil's below 100. But like I said before, I believe oil is going to go back into the 120s, especially if Iran starts doing this toll and pisses Trump off. The other thing, too, is there's another thesis going around that makes sense. Trump's whole game plan is to rebuild. Well, one of the ways that he can rebuild and make America stronger with its resources, because they don't need the resources like Europe does. He's good. Now that they have Venezuela, they're drilling their own. They have Canada. Uh, on the natural resource side for them, they're independent. They're good. By this strait being closed, what a lot of people don't realize is it actually helps America. It makes the rest of the world more dependent on America because then they're going to say, well, just come to us. We have all the natural resources you need and we'll supply you. No one's really talking about that side of it. So as much as it's like, well, we're going to pin it on them, they're not opening it, they're causing all this stuff, we're going to go to war to open the strait. Sure. But at the end of the day, it actually was benefiting America too. Maybe not in the short term, but it could be a benefit in the long term. If everybody else on the East starts having to, all of Europe starts going to America for their natural resources. And you already seen Canada do some deals. Also, so that's a contrarian view on, it's not always just don't go to one side, look at both sides and come to a conclusion somewhere in the middle, because it's typically not as black and white as we're led on to believe. Nothing is in life, and I learned that the hard way. So if you go now to Bitcoin and you look this way, you're seeing, again, I think I put this out a few days ago, you're seeing a bullish pattern in a bearish pattern. And I believe it was maybe 3 weeks ago, I said there's a lot of liquidity. And if we break above the 50 and hold, the next level is going to be the 200-day moving average. Now, it's amazing how it looked. And I thought for sure once it broke below this bearish flag, it's going like around here. And sure enough, the markets can be irrelevant longer than you can be Sullivan. That's an old saying. And this right here just goes to show that all these people right here that build their short position, someone like me, if you never covered and you're holding, you're going to get liquidated with your stop loss. Because if you go to, I'm going to put this here, if we go over here and we look at the liquidation heat map, this is on the 24-hour. There's a lot of liquidation, $423 million at about 74, $621 million, 609 at 75, just call it 75,000. There's over $600 million in liquidation that will occur. And if you go to ETH, you're looking at 163 at 22,675. So keep those numbers in mind, because if we go back, this is what I was saying. We're going to go up, take the liquidity. Like if you go up to 2309, there's 253 million on ETH. Go back now, look at the charts. Same thing. Where's this 2511 ETH can go? Which if it pushes and we get some momentum, it could go to 2687, right? But we're still, it could hit up here and then you could get a big candle wick down. And if you're thinking there's no way once we're out of this, it's going to go, let's take a look here. Because remember what I said, it's bullish when the 10 crosses the 20 and the price is above the 50. And then typically what happens is we ride the 20-day moving average as support until that comes to an end. And then it makes a higher low and higher highs, and you know what the trend is and you go with it. But the thing is, we're still in a bearish form. We're still in a bearish pattern, which is a bear flag. If this was going down, sloping downward, then I would say, okay, that this is going to go for a rip. Look right here. 10 cross to 20, price is holding above the 50, and then we rolled back over. So keep this in mind. We could do the exact same thing. And the reason why I'm saying, like, we would have to get a really big impulsive move for this to be void. And that could happen. Until that happens, though, people, do not go 100% on one thesis. Stay neutral. Because this is showing we're going to get a good rip up, and it's going to take out a lot of shorts and a lot of leverage. You're talking over 230, $240 million of liquidity up here. That's going to get wiped out on ETH. And if you go to Bitcoin, it's the same thing. I actually said, I believe a month ago, that we could get, I think, to 84,000. And as long as this formation, it's still bearish, but if I just keep extending this and we stay in this channel, we could go 84, we could go 85, 86. It doesn't matter. As long as we're in this formation, it is still a bearish flag, but it's moving up. So you got to play the range. You got to play with a tight stop, and don't go too heavy on leverage, because that's where you're going to get wiped out. So listen, we could go back down, hold the bottom. There's your head and shoulder. And then next week or the week after, we can continue to make our way up. Another thing too that's very fascinating, and this is another contrarian view. We all across, when you look at a lot of the channels and a lot of analysts, people are saying the market's going to crash, and it's going to crash big. The only thing I think of is this chart, and this is the ISM. This is the Purchasing Manager Index. Big money. You can see when we get up here, that's a market crash waiting to happen. That means the market is overbought. We're not even close. This is liquidity in the market. This is the smart money. This is the institutional money. So if they're smart and we're dumb, and the dumb money is calling for a crash, that's a problem, because this chart shows you that they're putting money into the market, not taking money out. And it's a big jump. We just broke over the 50 mark, which you can see 50's been a big roll. This was COVID. No, this is 09. And then this is COVID. So you can see a lot of people, even back then. What was interesting is I started getting into the investment world around this time. And I remember everybody was saying it's going to get worse. I bought Tesla stock. I think it was $24 a share. I bought Bank of America stock at $4 a share. Tesla was probably my biggest mistake, listening to people around me. But what's interesting is, look at what happened. Everybody in 09 said it was going to go, this is Armageddon. Between that and Obama getting in, it was insane on what people were saying. And what actually happened is that was the bottom, and we had literally a decade run. It was huge. And it was the best time to actually buy into the market. So I'm not saying we're in a bottom of anything. We're actually heading closer to a top. I just don't think the top's here until I see this number get somewhere above 57. And then I would make that argument. So that's another reason why I think, okay, we could have had this correction in the market, which I believe the S&P and the Nasdaq was, 10, 12, 13, 14%. And yeah, that could be a bottom, right? It doesn't mean that my targets I put are absolutely 100% going to get hit. That's where I expect them to go. And then it can make its next leg up higher, because we still have a lot of time left in the year. Typically, at this time of a year, March and April, is when these things bottom out or occur. So we could get one massive leg down, and that's the bottom, or we can continue to go up, void everything that we were thinking, and make a top in the market. So these are the things to be cautious of. Look at both sides. Let the charts dictate what's going to happen. Right now, this is bullish, but again, there's order blocks, there's liquidity, and the war news is not good. The views of what's going on around the world are not good. Things can change overnight, and he's famous for that. Now, if things actually get better, you're going to see, like, the thing is, if things get better, did we already price in that in the market? That's another question. We already had a good leg up based off of this ceasefire. So is that already pricing in that this war's coming to an end and it's done? Because if so, anything that comes out negative from there is just going to cripple the market. And then what do we have for a catalyst for the market to continue to go up? So, like I always say, if you found this helpful, subscribe, hit the bell icon, stay connected. Don't just watch the videos and don't subscribe. Hit the bell notification, whether you like me or you don't. If you're going to watch the videos, at least support it. Stay disciplined, trade with intention, and God bless you all. Have a great day.